Hi, welcome to this video, day 18th of November. It's Saturday. We're going to be looking at a couple of pairs. We looked at them last week. They're the AUD USD and AUD JPY. I've done plenty of videos on these pairs, tracking our progress in our trades. Okay, just giving good risk reward entries. Now, in terms of AUD USD, it's done really well for us. We're up over 400 pips. I think there is more to come in terms of AUD downside. Okay, however, I do think we could get a little bit of a bounce in the short term. That bounce will be a selling opportunity in our view. Now, last week we were saying, we are very US dollar bullish, but we're even more yen bullish. So we switched all our trades last week to being long the Japanese yen on various pairs, and I did a video earlier on which you can check out on Euro JPY and USD JPY. Both made good moves in favour of the yen. AUD JPY has also made a great move. We looked at a high odds breakout level last week. We've moved 200 pips away from it, so it's a really nice move. Now, in terms of AUD JPY, it's had a nice move. There is far more to come. In our view, we think this is going to develop into a really, really big trade, okay? Now, what we're going to do is go to the charts, and just for new viewers, what we're going to be doing is we're doing a very simple technical analysis, only focus on big support and resistance levels, but what we are also going to do is back up our view with our favourite tool in Forex trading, the COT, the Commitment of Traders Report. If you do not know what it is, it's a fantastic tool. Find out more about it on the link beneath this video. Now, this tool actually helps us detect what could be big moves, okay? It gets us all our big trades. So, if you study it, you'll see how useful it can be. Now, if you just want to watch the video through right now, just keep in mind what we want to do is we want to trade with smart money commercials when their positions diverge significantly from large speculators. The commercials are heavily bullish the yen at the moment. Now, what I'm going to do first of all is I'm going to start off with looking at AUD, USD and the Commitment of Traders data first. On the Australian dollar against the US dollar, we're just going to look at the COT net traders positions and go and draw some levels on the chart. Now, as I've just said, just for new viewers, we're interested in what these commercials, these hedgers are going to be doing against large speculators. We want big divergence between the two groups. We get it here. It's the biggest divergence on the chart. You can see the speculators build up. And what happens? It breaks down in favour of the commercials who heavily oppose them. Okay? And I was saying when we were first looking at this setup, historical divergence, points to a 500 pip move. Okay? And if you look at the COT in relation to the AUD USD and the divergence that is needed for a big break, that one there historically is a good one, which points, to, like I said, 500 pips in terms of a break. And we've nearly done that, okay? Now, what's happened, though, is you can see the speculators are getting rolled over on stops. They're coming out of the market. They still hold a sizable net long position, okay? Commercials, they've just shifted some of their hedges as well. They still hold a sizable net short position. So I do think there is more downside to come. However, just feel that we've had a really good move. We are going to get a little bit of a rally. That rally will be a selling opportunity. So let's look at where it might go to. Australian dollar, US dollar, and basically what I'll do, obviously, draw some levels and where we could be going. But I just want to stress a point, particularly for new viewers, in terms of using the COT. Obviously, we've done quite a few COT trade-based videos over the last few weeks, and thankfully, they've done really, really well. Okay, but it's not just a question of you could just follow the commercials. Okay, when the divergence comes between them and speculators, because you've got to keep in mind they are hedgers. They do not lose any money. You can get a big divergence. We've had them. We think they're great risk-reward trades, and then suddenly it goes against the commercials by 200-300 pips, maybe even more. they're not losing any money. You know, it's going to come back in their favour, but you've got to use good stop protection and also time your entries technically. Yeah, if you get stopped out, you normally get a chance to have another bite of the cherry, so to speak. Now, in terms of this, I'm just going to show how we confirmed our entry for new viewers very quickly. Here is where we see that COT divergence build up, specs coming in to buy, commercials coming in to sell. Specs want to take out this candle tail. She goes up, takes it out, comes back and settles beneath the tail. That for us is spec buying exhaustion. But yeah, obviously we've got hindsight now, okay? At the time, we did do an entry. We took it short, but she found support into the 20-day moving average. So we just covered that trade out, okay? We do get another poke above. That's the important candle for us. It's the entry alert candle. The tail can't take out that tail. The body of this one finishes back below this tail, obviously, but it's still blue. So we want some red to get in. You know, it could have another attempt. Yeah, obviously we've got hindsight on our side here now. So what we want to do is we want to get some red, and we're thinking, well, you know what? We think if it takes out the 20-day moving average, it's around number 80, very significant as well, gets away from the 80 level, then that will be a good entry to come in on. We can see if it runs onto the downside. She runs onto the downside. We're thinking, actually, you know what? That's probably it. This half-hearted test here, another half-hearted test, then we drift down. That's it. We think we're going lower. Do have a little bit of a rally back to the 20. Struggle to get above it. Full, sideways, and then another full. Okay, so from the entry, it's a really decent profit. I just feel that there's going to be a little bit of a bounce. And in terms of the bounce, how far could it run? I'm not going to do it in this video, but I did it in my last video. The level that was really important on the weekly level, on the weekly chart, was the 77 level. You can go back and watch the video. Just put up a weekly chart. That level snapping for us, highly significant. It should now provide resistance as well. Okay. Also, you've got the 20-day moving average. Yeah, we will struggle, in my view, to get above that. We'll struggle to get above 77, in my view, and close above the level. That's my view as of right now. Okay, so I just feel that, you know, look to sell her back to this zone here. I mean, obviously you'll have to see how it goes. I mean, you can follow my analysis daily in the member centre if you wish, but I just feel that 77 level could be targeted. What are we now? We're 75.60. Okay, so you're looking at about 140 pip rally maybe. You can see we come off the low, we've come back within this volatility band. We should go to the 20 and possibly up there. So if you are short, I would certainly be looking to lighten exposure. We always take half our trade off when we think there's going to be a retracement coming, because we'll drop it back in, hopefully, at a better price. Also, this stochastic has turned flat, 13.10. That's, yeah, obviously oversold. Then you've got the RSI, oversold, or just touching oversold. A little bit of a rally. My own view, though, is once that rally has come, and I think it's going to fade, where are we going to be going? We're going to be going down to here. So basically below the 74 level, okay? 73.70, then we'll be going down to 72 in my view. Where do you want to put your stop? Always be one level back, in my view, from, yeah, this is resistance. You want to be one level back. At the moment, I would see it as there, behind that level, okay? You've got plenty of downside to come. You need to give the market a little bit of room to breathe. So if we rally back up towards that 77 level, I don't think it's going to last. We're going to be going down, like I said, 73.70, and then the weekly support at 72. All right, that's my view of AUD USD as it stands at the moment. Let's go and have a look at AUD on the Australian dollar Japanese yen daily chart, and just draw some levels. And First of all, let's have a look at these COT net traders positions and divergence. You don't get CFTC data for the crosses. You just create it from the two majors that make the cross. So AUD, USD, USD, JPY, total up what both groups have got in each of those, and then you got the cross. Speculators 6.3 to 1 in terms of longs over shorts. Commercials 7.5 to 1 in terms of shorts over longs. So obviously speculators very bullish, commercials very bearish, divergence between the groups 13.8. We always like divergences above 10. We study about 30 pairs each week, and it's the ones that are above 10 that always interest us. This one, in this pair, we've been noting, the commercials just keep loading up on their short positions, okay? It's on the bigger divergences. Why? You don't need to know why necessarily, you just follow the COT, but I've just summarised the reasons, okay, very quickly. It's the most overvalued major of the Aussie dollar outside the Swiss franc. The Swiss franc's got a unique personality, but of the big majors, the AUD is way, way overvalued historically. It's a risk proxy currency. It should be going up with stock markets. It's been going down. The stock market's been pretty bullish, so it's getting no support there. Commodity cycles are bearish, okay? Big exporting nation in terms of commodities. Here we look at the price of iron ore, coal, copper, three big Australian exports, also the CRB index. We believe we're moving into a bearish commodity cycle. Now, bullish and bearish commodity cycles don't last for a few weeks or a few months. They last years. We're at the beginning of a commodity bearish cycle in our view. Okay, interest rate outlook favours the JPY. We don't see rates going up in Australia. They're on hold. In terms of Japan, I mentioned it earlier in a video I did today on Euro JPY and USD JPY. Their stimulus is at its maximum. It can only be reduced from current levels. So they're really big fundamentals that I think the commercials are seeing, okay? And I did put this little quote here, super tanker fundamentals. So I was chatting to someone and he was saying the super tanker fundamentals. And I was saying, what do you mean by that? And he goes, well, you just think how long it takes for a super tanker to stop and turn around, okay? Oh, I just thought that was quite a good analogy, actually. Right, on to the chart. Okay, so we've been trading it short from back up here, actually, but our latest position is here. This is alerting us to our latest short. COT divergence up here was 15. She comes up to the 20, pokes above it. We'll just sell her back through the 20-day moving average. 87.35 was our entry. I'm then saying in the video that we did last week that the high odds entry though would be through 87. Okay, why? It's a good weekly support level. Okay, and also you've got a weekly support level, round number, and there's a lot of speculators long. So if we break the level, you want to clear it by 30 pips. I always say, always get away from the round number. You can then wait for the stops to get hit. Okay, can't see that just purely from the chart. You don't know, but the COT is telling you speculators are probably going to get washed on stop. So go through 87, make a nice move down to about 84.70. So 230 pips. Okay, if you came in through 87. For me, when you use the COT for breakout trading or back up your breakout trading, you can really filter out what's going to be a breakout and a fake out. Okay, so she's moved nicely there. If you're in the trade, you can always take off half for a little bit oversold and wait to sell a bounce. I personally think we're going to get a bounce. So where could we bounce to? I think 86. So 86. I think we could get up to possibly 86.50. I don't think we're going to be seeing level going above 87 for a while. Okay. So you can always sell the bounce. You just have to see how it goes, okay? But we are oversold. We've dropped outside the volatility band. Stochastic 4 and 6. And you got a RSI oversold as well. But with these super tanker fundamentals in place, any bounce to sell, we're going far lower. Said it in the last video. The first port of call is going to be down towards this 82 level, okay? So still plenty of downside. And yeah, said it last week. You can look at the video. I did the weekly chart as well. Yeah, we're probably over the next few months, in my view, going to go down to 66. Okay. In terms of stop, where do you want your stop? The minute I've got mine tucked back behind the 20, but I will be bringing her down. Okay. Once she decisively clears out 85, maybe after rally, I'll bring her down to 86. We just have to see how we go. Right, that is my view of the AUD against the USD and JPY. If you want our daily technical analysis and our full trading techniques and our analysis of the COT, just simply click on the link beneath this video. Thank you for watching me as usual. Take care and have a good day.